Hey everyone, today I'm going to talk about what an index fund is fundamentally and walk you through my own understanding of it. I'll break down how it actually works, and also if you're unfamiliar, I'll explain why a lot of investors recommend it and a lot of its advantages. If you were to do a quick Google search about what is an index fund, these are the results you would find. An index fund is a mutual fund or an exchange-traded fund designed to follow certain preset rules so that the fund can track a specified basket of underlying investments. If you're unfamiliar with some of the terminology, this can be quite an intimidating definition, and it might be a little confusing. Before I completely explain how index funds work, I feel like it's necessary to explain how investing works and how buying stocks works, but I'm going to explain that with an analogy. Let's say you go to the store and you buy a box of pasta. Now you own a box of pasta, and at the time you bought it, it cost you $1. 1 month later, the price of a box of pasta goes up to $1.50. If this happened, theoretically, you could sell your box of pasta for $1.50 and make a 50-cent profit. The only reason this specific story might not totally work is most people buy their pasta from a store, and usually they don't buy it from a neighbor or someone trying to sell a bunch of boxes of pasta. But the stock market is different. You can enter the stock market very easily through apps like Robinhood and Webull, and you can enter and buy stocks with very low trading fees. You can go into the market and find a stock that you'd like to buy. Once you buy it, you now are a small part ownership of that company, and if that company's value goes up, or if the price of the stock goes up, the stock that you bought also increases in value. When some people are first learning about investing, it can be very exciting and also frightening, I guess, at times, because you could make a lot of money if you really pick the correct stock, let's say, but you could also lose a lot of money if you just pick the wrong stock at the wrong time and you just lose everything that you put into it. This is why a lot of investors have the type of recommendation to diversify your stock portfolio, or in other words, don't just buy from one company or one stock, but you should purchase many different types of companies or many different types of stocks. Now let's go back to what are index funds. Index funds are similar to stocks in that you can buy a share and hold it and sell it. And in that sense, it works the same way. But index funds are managed in a way that they are naturally diversified. For example, there's an index fund called the Vanguard 500 Index Fund ETF, which closely follows another well-known index called the S&P 500. This fund is diversified through the top 500 companies here in America. It's constructed to follow certain rules so that the fund as a whole remains diversified. When you go to buy a share of VOO or another similar stock that closely follows the S&P 500, in a sense, you're purchasing a small fraction of 500 different companies in the US. This diversification or property of index funds makes them a very powerful investment tool for the everyday person and can also simplify many people's investment strategies. If you simply invest a constant amount of money at a regular interval of time for a very long period of time, like 3 to 4 decades long, then over that period of time, you can become what is known as an everyday millionaire. This kind of prescription of investing, it's also known as dollar cost averaging. But this type of suggestion or advice to invest is one that Warren Buffett recommends. He's one of the greatest investors of this era. And also Graham Stephan, if you aren't familiar, he is known to be one of the gurus of personal finance here on YouTube. So here I am, I'm joining these two people and recommending you guys do the same thing. And it's a very simple strategy, it's a passive strategy to build wealth. I hope you found something informative from this video. If you have any other questions or topics you'd like to see covered, please feel free to leave a comment below, and I'll see you guys all in the next one.